Welcome back everyone to Pete's Investing Updates. We review the weekly progress of some sample blue chip stocks from Australia, US and Europe. In this week's summary, we re-look at BHP, which showed another major drop in its share price again. At first, if you want me to review a share price, please put it in the comments. I'll cover it in a future video. As always, click on the subscribe button, the notification bell, and like the video to support the channel. These are the playlists I've got in terms of the where we store our indices, blue chip reviews, and also the strategies we follow. And that's where we keep some of the simple trading strategies, the average down process, and money management ideas. Again, this is not financial advice. It's purely an educational video series for you to better trade and invest your hard-earned money. A couple of things to consider. We track our charts on the daily chart. We backtest and track revenue over drawdown. That's a key indicator for our successful trading and investing. Brokerage is included in our backtesting, and dividends are not included in our backtesting. And we transact with $2,000 lots per trade. So let's get started. First, I want to introduce to you the overall charts or the companies we're following, and these are all the companies over pretty much since back to the start of 2020. You can see there. They're all progressing quite nicely, with the exception of BHP. They took a dump last week, and it took another 7% drop this week, and I'll talk about that in a second. Telefonica is progressing smoothly as well. So let's first go to the data behind all this, and this shows you here the dividend yields, and in yellow here highlighted are what ex-dividend dates were hit recently for the Commonwealth Bank, BHP Australia, and Johnson & Johnson on those specific dates. Now here in particular, let's look at BHP. It went ex-dividend on the 2nd of September. Now why is that important is because generally investors often take their money and run after the company goes ex-dividend. They take a dividend, and then they also sell out of their positions if they've got a substantial holdings and they're in a profitable position, or they're feeling a bit negative about the company. So let's look at BHP, the share price, and what it's done. So this happened last week. It fell quite substantially. And yesterday on Thursday, today's Friday, 3rd of September, yesterday it fell another 7% there. Now, again, we're not panicking. We're going to still follow our strategy. Let's look at the strategy we're following here, and that's this middle profitability chart. And that reflects 3686 reflects BHP in that number there. Now, this is a live chart we're looking at today. So that 3686 has now gone down a few cents or a few dollars in our holdings from when we last took the reading. So that's the one we're trading at the moment. Now we may change that. Now I'll explain what these other profitability charts are in a minute. But as you can see there, it's broken down below the MA moving average 100, and our moving average 100 is also turned down. It's broken the initial moving average 20 back then last week, and it may even come back and bounce off this moving average 1,000, simple moving average 1,000. So again, we'll keep an eye on that from a moving average perspective. Now, what these charts indicate, I'll just go back to the start of 2007. We're testing the data. Now, this is the one we're trading at the moment. You can see here, as I said, we're making 36.87. But I've also tested, I don't want to get too many contracts entered into the market in case the market goes substantially against us. You can see here, there's less contracts entered here, and likewise in this one, there's less contracts entered here. So what I've done, I've put together and this is the strategy we're following at the moment, the middle chart, and that's this middle one. Now the other two are, program 3 is basically the same as the first program. The only difference is we're looking at the average high-low range of the last 100 bars, and if that's closed below the position price is the average price closed. What we're doing with program 3 is looking at the last trade price entered. So the same overall logic, except you're looking at the last 100 bars high-low range, and has it closed down from the last traded price. That's the only difference between program 1 and program 3. Program 2 does something similar to the trade price in terms of it's moved down 100 average high-low of the last 100 bars, but it looks at a moving average 100 breaking up to enter and moving average 100 breaking down. So as you can see here, as a summary between programs 1, 2, and 3. Again, program 1 and 3 are very similar with the exception of the trade price versus the average price. Program 2 is looking at the moving average 100 breaking up and down. So the key point to make notice here is the profitability, which is our drawdown profitability percentage over the drawdown. So it's basically looking at the overall revenue over the drawdown, maximum drawdown, and that's 191%. So the higher the better, and that's why that's green. So this is the key indicator for us. Second off the rank is program 3, which is again a similar logic to this one. It's looking at the profitability over the drawdown, which is 113%. That's a drawdown there. You can see there it's made a couple of $1,000 greater than the drawdown. So it's 113%. And in terms of profitability over drawdown, program 2 scored the lowest result, so we're probably not going to trade that one. But if you can look at, just reference that again on the charts, and the profitability charts, you can see these two are very similar in logic, except this one enters the market more times. So we'll ignore this one for the moment. Let's focus on this strategy and this strategy. This is the one we're trading now, and this is the one we're probably going to move to. So it's going to bring us a lower revenue over the period, as you can see from the average monthly revenue, 229 versus 115. So it's about half the revenue, albeit a lower drawdown as well. So it's about half the overall revenue, but slightly lower. So if you want to take a bit more of a risk appetite, you could probably go and still trade with our existing program if you're prepared to take a bigger hit. Now, the reason I mention that is because obviously in our case for BHP, it's still going upwards and it's still gaining quite nicely. Let's quickly look at another chart just as a comparison. And this is AMP of the Australian market. You can see there they're all in the red in terms of profitability, but you can see here there are more contracts entered. So we're down from 100,000 baseline, we're down to 82,200. That's our program running. The other preferred program we're looking at is 95,000. So we're down about $5,000 on this program here. So again, let's ignore this one. It's about 95,000 as well. But this one's probably going to be more profitable overall. So again, if you've got a bigger risk appetite and a deeper pockets, you could probably trade this strategy. Or if you want to go a bit more cautionary, I would suggest trading the 400D program, which is this strategy. So I'll keep those two live at the moment, and we'll probably rub that one out and just focus on these ones at the moment, see how they perform in the next few weeks. That's it. Don't forget to hit the subscribe button, the notification bell, and like the video to support the channel. Thank you.